Gold is under heavy pressure right now, and this is going to be a very volatile week, guys. The market has shifted from aggressive safe haven buying to inflation and yield concerns dominating price action. Your chart is reflecting this perfectly. After rejecting the 4,700 and 4,750 region last week, gold has now sold off aggressively into that 4,540 support zone. The market is currently balancing geopolitical fear, which was bullish, versus the stronger dollar and the rising yield, which is bearish for gold. And right now, yields are winning short term. What happened last week, guys, with Trump and China? I'll break it down for you. One of the biggest market focuses last week was between Trump and Xi, where they're meeting in China, was the markets were watching for the tariff discussions, trade negotiations, AI and technology agreements, obviously the Iran diplomacy discussion, and also a global supply chain implications. Now, Reuters did report this morning that markets were closely monitoring the Trump-Xi talks because trade tensions and geopolitical instability is directly affecting inflation expectations and the safe haven demand. So during the talks, China did signal its willingness to cooperate in some areas. Trump suggested progress on trade and aircraft agreements. Discussions around Iran and oil supply also surfaced, and markets interpreted the parts of the meeting as slightly risk on. That actually reduced the safe haven demand for gold temporarily. However, there was no major breakthrough, and the markets are still worried that tariffs could return, tensions around Taiwan could escalate, or a supply chain conflict could intensify fear. This uncertainty is still supporting the long-term bullish movement of gold. But why did gold drop so hard after the talks? Well, the biggest reason is gold weakened was not just the China talks, guys. It was also the rising in treasury yields and the inflation fears. Reuters also reported that oil prices are surging, inflation expectations are increasing, bond yields hit yearly highs, and traders are starting to reduce expectations for Fed rate cuts. This is extremely important for gold because a higher yield means a stronger dollar and a less attractive environment for non-yielding assets like gold. So guys, gold fell to 4,700 to 4,750 region. Sellers are stepping in aggressively. Lower highs started forming and momentum has shifted bearish. Now price has sold off into that 4,540. This is a major reaction zone, guys. So I'll keep you guys up to date. But for now, let's see how it unfolds. But get ready for volatility this week. Volatility is coming.